Today, here is Oyedeji Eso from Qodelhar FX. Today we are going to talk about managing trading psychology. So managing trading psychology is one of the topic that is very very important than even knowing the numbers. Knowing how to trade does not mean you should know how to manage your psychology, because our psychology in trading is widely considered 60% of the formula for success in forex trading. So if you are focusing on controlling our emotion like fear, greed, anxiety to make rational decision, then we are managing our psychology. So, and this is very important in forex trading. We have to know how to manage our psychology in order to be a successful trader. So, and in managing our psychology, our mindset is very important. We are It's very powerful in trade as a trading tools. Is one of the most powerful trading tools. So successful trader mind discipline, patience and emotional control, especially under pressure. So when you know how to manage your psychology, then you must know how to control your emotion, discipline. Then you have to know how to be patient in trading for you to be a successful trader. So understanding your trigger and managing risks to prevent emotion and impulsive trade is very important. It's part of your emotional control. It's part of your psychological management. So how do we go about it? There are some there are some things that needs to be understood. So common psychological pitfall in forex trading. So number one is revenge trading. This is what really cause psychological problem for us. Revenge trading. What do you mean by revenge trading? By revenge trading, we mean when after we must have lose a particular trade, we now go in by force again. When we don't see trade, we now force our trade. We now force trade. We now force our trade. You force ourselves into to see what we are not supposed to see. We force ourselves into trading. So that is revenge trading. So you don't trade a good trader. After losing two particular trade, you must leave the market. If you lose two consecutive trade, the best thing for you to control your emotion is to leave the market till another opportunity comes, or till next day when your emotion must have calmed down. So in this light, you must know how to manage defense trading. You don't trade when you have too many losses. You don't trade then. You have to keep your loss and go and rest your brain. So that is a good what? A good psychological management. So in that, the next thing that is very important in our trading is overtrading. Overtrading can also be revenge trading, but to have a good understanding about overtrading, it is when you know the certain amount of capital you have, you now place too many position on the amount you have, meaning that if the trade goes in against your direction, then you might lose the account immediately, and that will affect it give you psychological problem. It will give a psychological problem. So in that process, you don't overtrade. Don't take too many trade without a plan. Before you take too many trade, you must have calculated your risk. You must have calculated how much are you going to lose. If you are taking 20 trade, can your can your risk hold, can your capital hold the risk of losing those trade? So you don't take too many trade. For example, you are supposed to risk nothing lesser than or more than 1 to 2% of your capital. Now you now calculated your risk to be $1 out of $100 account. You now take 20 position, when you are taking 20 position on $1 risk, that is $20. You have already risked how much? That is 20% of your account. That's too bad for a good trader. That's too bad. So you don't overtrade. Don't overtrade. Anytime you are trading, you don't overtrade. Always stick with your plan. Stick with your plan. So don't take outside your plan. Then fear of missing out. A lot of trader like jumping into trade. The trade that you don't know the sources. You don't know how it happened. You don't know how the trade how it started. Some people, just lot of trader jump into the trade. So we have to know when is it easy. You have to discover what really caused the movement. That's just the simple language. You discover, try to know what really caused the movement. Is it breakout? Does it bounce on a particular zone, or on a particular trend line? What caused the movement? You have to discover, you have to know it before you don't just see candle lining up on each other and jump into it. What if you jump in and the market started reversing? That will affect your psychology. That will give a problem. It will give you problem because you will not be able to manage the account. You started thinking awkwardly. So you don't just enter into trade. You have to do what? You have to know the causes of the movement. What's the source of that movement that you are following, either up or down? So that is FOMO, fear of missing out. Don't just jump into trade. You don't miss anything. Market is going nowhere. If you miss this movement, another movement is coming that will give you profit. So you have to control that mindset. You have to control that mindset that usually tell you that you should jump into trade when there is a long movement that you didn't know the sources. And the last one, the last pitfall, the last psychological pitfall is greed. 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 This one is also very, very important. It affects almost all the traders. When you are talking about greed is very, very important. You have to take care of that. Human being, we are naturally greed in nature. So how do you manage this in forex trading, in financial markets? A trader that is trading $100 account, and you have already made, like, from your mapped out, you have already made 60% of your mapped out, and the market started ranging. Instead of you to lead the market, or you trail your stop, you leave it, it will go after you have made already more than 60% of your projected profit. The best thing is to leave the market, because at that time, in the ranging position, in the ranging zone, the market can turn back from there. You cannot predict what will happen. The market can turn back, can give you what you don't expect, and your blue trade can turn to red trade. Your winning trade can turn to lose trade. So in that, you have to manage greed very well. Be satisfied with little profit that you have. None of our father owns the market. None of our president owns the market. It's a decentralized market. Nobody can control it. So you trade according to what you see. You don't trade according to what you know. You trade according to what you see. We know that market can break this zone. It can break. When it break, it retests, then it move. No, what if you didn't break it? You trade what you see. You respect that zone. As the market is respecting the zone, you as a trader should respect the zone too. Respect it. The price can turn back. So respect it. So let's solve the problem of greed. So how do we master trading psychology? There are some psychology that there are some trading guide that need to be mastered. For example, we have to develop a trading plan. When we develop a trading plan, a solid written trading plan act as your roadmap. It reduces the need for impulsive emotional decision. So we have to define our strategy. The strategy we are going to use to trade, we have to define it. When we define it, when we follow it, we set a clear one. We set a clear trading strategy. When we set a clear trading strategy, then when we follow it, we have an objective rule for entry. You have an objective rule for exit. We have an objective rule for stop loss and take profit level. So when all that is known, then we stick to it. We don't trade outside those predefined rules. We don't trade outside them. You have to stick to them. Sticking to them will make us to control our emotional issue, will make us to control our psychological problem. So when we stick to those rules, then we are doing what? We are managing our psychology. A disciplined trader follow their plan regardless of market fluctuation or emotional impulses. So that is how we do it. Then we treat our trading as a business. We treat our trading as a business. When we treat our trading as a business, we move away from it, from a get rich quick mindset. So we leave the market to run itself. We leave the market to run itself. So that is one of our trading, how to manage our trading psychology. Then we take a break when we are trading. When we take a break, then it give us settle mindset. When we take a break, our mindset will settle. Trading fatigue can even cause us a lot of things in the market. It will cost us a lot of things in the market. So in that, we always implement strict risk management. When we implement strict risk management, fear and greed are often fueled by excessive risk. When we have too much of fear and too much of greed, it fuels excessive risk. So proper risk management provide peace of mind. When we rest, then we have peace of mind and keep emotion in check. So always take a break. Take a break when we are trading. Take a break. It's very, very important. Then the next one, we should always keep a journal whenever we are trading. We should keep what? We keep a journal. In our journal will tell us the asset we are trading, the asset we are trading, then the risk management, the stop loss, the number of pips you are using to our stop loss, because automatically it limits losses to prevent panic induced decision. So we just have to follow that. Then when we keep our journal, in our journal we must have known that this is the particular position sizing that I'm using. This is how much I'm risking in this. So never risk more than 1 to 2% of your account on a single trade, as I've been saying it. So this lowering trade sizes can reduce anxiety. So when what you risk from your capital is small, it reduces anxiety and emotional effect on you. So we are managing our risk. So we should know how to accept losses also. When we lose a particular trade, put it down that you have lost so amount on this particular trade. Then whenever you are coming back for another trade, then you must have understand that losses are a normal part of the process, not a personal failure. It's not a personal failure. No trader can bow no trader can proud that he can never lose in trading. No, it's not possible. It's not possible. If you are trading that you have not been losing anything, it means you are gambling. You might be lucky. You might have luck at those particular times. So when your loss will come, it will wipe out all what you have made in that gambling stuff. So you must identify and control key emotion. You must identify and control key emotion. So those emotion: overcoming fear, curbing greed, avoid FOMO, preventing revenge trading. Those will give us energy. When you can avoid all those things I've mentioned now, fear, when you are overcoming your fear, when you are curbing your greed, when you avoid FOMO, as in fear of missing out, when you avoid that, then it will give you energy. You prevent revenge trading, it will give you energy. To give you energy. So by keeping a journal, you have already given yourself what? You have already given yourself self-awareness. You have already building self-awareness. So when you must journal your trade, recognize triggers. So identify what makes you to stress or reckless in trading. So you are, and all these things can be gotten from your journal. So emotional temperature check: before entering a trade, rate your stress level. If it is too high, do not trade. Always check all these things. So cultivate a professional mindset. Cultivate a professional mindset. It's always good. It's always help. So patience and discipline is very important. It's very important. So detach from outcome. Focus on process. That helps a lot. It helps a lot. So then control learning, increase your knowledge of the market to build confidence and reduce anxiety. So when you have a control of your learning, you have a continuous learning. Control the learning, know what you are learning, then you have the continuous learning. So I think from that we'll be able to control our psychology, and always also control our environmental and mental hygiene. So when you are too much of staying with the system, it's always an issue. Overstimulation leads to emotional mistake. Limit your time watching charts. That's very important. I've mentioned it before. Always take a break. Manage stress. So you cannot eliminate fear or greed, but you can learn to manage them by acting in logic rather than feeling. So with that, I think we'll be able to do well. Then lastly, we should be able to practice gratitude and mindfulness. A clear mind leads to clearer trade. When you have a clear mind, it gives you clearer trade. So with that, I think with this management is not just a module, it is a lifestyle for every serious trader. If you control your risk, protect your capital, and stay emotionally balanced, you will give yourself a real edge in the forex market. So amateur trader focus on profit, while professional trader focus on risk management. Our next trade will now be on AI and how to apply AI on our trading. Thank you. Don't forget to subscribe to our channel, like and comment for YouTube to push us to those people that need this content. Thank you very much. Have a nice day.